Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on SPY daily weekly time frame. So a very low volume day, which is what the bulls want to see on a red day of consolidation following the all-time high. It's an inside candlestick on the daily. We had a double bottom on the 5-minute chart at the low of the day, 226.42. So we know if we break that level tomorrow, we will be looking for the middle Bollinger Band on the daily as support, as well as some hourly moving averages. So bears definitely had control into the end of the day, but it was a pretty tight range, and again, the low volume is exactly what the bulls want to see. Weekly time frame, not much to see. We have room before the upper Bollinger Band resistance, and we have the exponential moving average supports. So checking in on the 5-minute time frame to see the action today, it was, like I said, a pretty tight range. The bears were in control first thing, and then we rejected from the 20-period moving average resistance after forming a higher low, but this consolidation that occurred after that rejection looked bullish, and that had me looking for continuation because we found support at 226.64, 65, 65, riding that resistance, and then a bull break. You can see some increasing bull volume, a new high of the day, before we inevitably rejected, shouldn't say inevitably, but eventually rejected from the 200-period 5-minute resistance almost to the penny, 227, and we got up to 227.07. Then we pulled back, still maintained higher lows, lower high, now a lower low, and here's where this level of support comes back into play. So 226.64, 65, 65, low of this pullback, 65 again, and then right when that 65 level breaks, you can see the spike in bear volume. Other traders are recognizing that key support breaking, and a quick flush to the downside. The bears then headed towards the low of the day, and we formed that double bottom at the low of the day by 1 penny. Then on the bounce attempt, look where we rejected. We rejected from 226.66, 226.65. So this level kept coming back into play time and time again. And if we put a line there, you can see it a bit more clearly, where we have support, holding, breaking, back testing, rejecting, and then a bullish break above that level at the end of the day before some more profit taking down at the low of the day. So that was the level to be watching in terms of short-term trading and levels. And if we look at the hourly time frame, it's a bit of a bear flag. If you take out this after hours and pre-market action, we have a 3-hour pullback. It continues into the start of the day. A short-term bounce, 1 green candlestick, back testing and rejecting from the 20-period hourly resistance, which held multiple times yesterday, or I should say Friday. So we rejected, and then we pulled back to the low of the day, and the low of the day is currently being defended, but you can see the volume favors the bears. We had a couple candlesticks of increasing bear volume, and then some high bear volume there right at the end of the day. So if we break that double low at the low of the day, 226.42, we're looking down at these hourly moving averages, 225.76, 225.63. These hourly moving averages will come before the daily middle Bollinger Band support. So those are the supports we're looking at. The 20-period hourly is the resistance we're looking at. And we'll see how it shapes up tomorrow. We'll check back in. See you then.